Hello students, in present video I am going to explain about 12th problem from final accounts topic. I am taking this question from Telangana State Telugu Academy Inter First Year Accountancy Textbook. Let us see the question first. First we have to prepare trading account and profit and loss account in one table. Then we will prepare balance sheet. Heading trading account, profit and loss account of Veena Enterprises for the year ended 31st December 2018. Debit side, credit side. First trading account, debit side, direct expenses, direct losses, credit side, direct incomes. Direct expenditure means up to manufacturing expenditure. Direct income means main income for the business, nothing but sales. Debit side, with opening stock we should start. See the trial balance debit side. Opening stock 9,000 is given. With the 2 we should start. To opening stock 9,000 rupees. Next, one by one debit side of trial balance. Purchases. We purchase raw material. We bring that in our firm. Then we manufacture now. This is up to manufacturing expenditure. Direct expenditure. Therefore trading account debit side. Before writing the amount, we have to see whether purchase returns are given or not. In trial balance, credit side they give purchase returns. See the credit returns are given. No need to mention clearly that it is purchase return. In trial balance, credit side if returns are given, then the meaning is it is purchase return. So purchase returns are given. Therefore purchases amount in inner column 17,000. Returns we have to subtract minus returns. Credit amount 600 rupees. Net amount in outer column 16,400 rupees. Purchases, opening stock, returns, debtors, insurance, wages. Wages we pay to workers. Workers work in factory. Factory related expenditure is manufacturing expenditure, means direct expenditure. Trading account debit side we should show 1600 to wages. No adjustment. Therefore amount in outer column 1600. Repairs, audit fees, bad debt, carriage. Carriage means what? Transportation. Only carriage word is given. Then the meaning is from supplier's place to our godown. We transported these goods. After bringing the goods to our godown, we manufacture the goods. Means this is up to manufacturing expenditure, direct expenditure. Therefore trading account debit side. Carriage 600. Next, rent and taxes, printing charges, patents, discount, freight. Freight means also transport expenditure. Carriage means also transport only. No? Then what is the difference between these two? Freight, carriage, both are direct expenses. Carriage means, as I said, from supplier's place to our godown we brought the goods and we incurred transportation expenditure. Freight means from supplier's place to our godown only we are bringing the goods and we are paying these transport charges. But the difference is, generally freight refers to long distance transportation charges. Carriage word for shorter distances we use. For example, for local transportation, otherwise internal transportation means transportation within the country. From one district to another district, in district from one city to another city, otherwise from one state to other state. Here we can use carriage word. Suppose we are bringing the goods from other country, means we are importing goods from other country. In that case, if we incurred any transport expenditure, here instead of carriage word, it is better to use freight word. So freight also direct expenditure, because after bringing the goods only we manufacture the goods. 600 rupees. Furniture, speed post charges, machinery, legal charges. Trial balance debit side completed. Come to credit side. Here credit side. Capital, returns, sales. So sale is direct income now. Credit side of trading account. Buy sales. Debit side returns are given. Means sales returns are given. Therefore sales amount in inner column. In trial balance, Debit side, they give sales returns. 800 rupees debit amount. We have to subtract here. Minus returns. Net amount in outer column, 24,200. No other amounts. Come to adjustments. Closing stock value, only 1 point. So, opening stock debit side we are writing now. Closing stock credit side. Amount 8,300 rupees. See, trial balance credit side, outstanding wages 2,600 is given. You may get one doubt. While writing wages amount, why I am not considering this outstanding wages? Outstanding wages are given in the trial balance. If outstanding wages are given in the adjustment, then here 1600 wages in inner column we should write and the outstanding wages we should add. But outstanding wages is given in the trial balance. Means what? The 2,600 outstanding wages are already considered while writing this trial balance amount. Therefore, again we should not adjust. So everything we are taken in trading account. Finally, two set totals. Credit amounts total is 32,500. Debit amounts total 28,200. Credit is more than debit. Income is more than expenditure. Therefore, the difference amount 4,300 is gross profit. So debit side total is less. Therefore, debit side we have to show this gross profit amount, 4,300 rupees. For this answer, you have to write 2 gross profit. Two sides highest total 32,500 credit total. With this, trading account is completed. In the same table, continuation is profit and loss account. Debit side answer gross profit, credit side we should write. Now profit and loss account. With the gross profit we have to start now. Credit side by gross profit 4,300. Debit side indirect expenditure, indirect loss. Credit side indirect income. We should write. Indirect expenditure means after manufacturing expenditure. Means this expenditure is not related with the manufacturing work. Indirect income means other income. Sales main income. Other incomes, interest received, commission received, discount received, etc. come under indirect incomes. First, trial balance debit side. Purchases, opening stock, returns, debtor, insurance. We have taken insurance policy. To insurance company, we have to pay the premium. So that is indirect expenditure. Trading account debit side. To insurance. When insurance word is given, meaning is insurance premium we have paid 1,500 rupees. Wages, repairs. So repair expenditure is in indirect expenditure here. P&L account. To repairs 1,300 rupees. Audit fees. We prepared accounts. Our accountant prepared accounts. But government is not going to believe these accounts because generally we try to manipulate our accounts. So every businessman tries to escape from tax burden. Therefore, he may give wrong accounts to the government. Therefore, there is one statutory rule. That is, our accounts are to be audited by one chartered accountant. Auditing means verification of accounts. For that, CA charges some fees. That amount is known as audit fees. To our firm, this audit fee is expenditure. Indirect expenditure, profit and loss account debit side, 1,200 rupees. Bad debts. So in trial balance, bad debt is given. Credit side, bad debt reserve is not there. In adjustment, second point, reserve for bad debt 5%. So on debtors, there are two amounts, bad debt and a reserve for bad debt. Bad debt is given in the trial balance, reserve for bad debt is given in the adjustment. So bad debt means from debtors money is not going to come, loss. Therefore, profit and loss account debit side. Two bad debts, amount 1,000 rupees. In adjustments, reserve for bad debt is given. So this is expected loss. From debtors, money may come, may not come. We have doubt. As per conservatism convention, that expected loss we have to show in the books. Which side? This is also loss, no? So debit side. 2. Reserve for bad debt. On debtors you have to calculate. Debtor amount is 25,000 given in the trial balance. On that, reserve for bad debt percentage 5%. Observe one point. While calculating reserve for bad debt, I am not deducting bad debt amount 1000 from debtors, because this bad debt is given in the trial balance. Means already 1000 is deducted from debtors. After deducting that 1000, remaining debtor value is 25,000. That is why on that 25,000 directly reserve for bad debt we have to calculate. Suppose this bad debt amount 1000 is given in the adjustment, then that 1000 is not yet deducted from debtors. So first from 25,000 that 1000 we have to subtract. On 24,000 on remaining debtor value, this 5% we should calculate. $1250. Bad debt is completed. Carriage over rent and taxes. So only rent word is given. Then the meaning is this is office rent. So indirect expenditure, P&L account debit side. To rent and taxes. Adjustment is given. Therefore amount in inner column 2,200 rupees. Adjustment is outstanding rent 600. So outstanding means we have to pay. Therefore we should add plus outstanding 600. Total in outer column 2,800 rupees. Printing charges, indirect expenditure, profit and loss account debit side. To printing charges 2,600 rupees. Patents. On patents, depreciation is given. Depreciation on patent 10%. So depreciation comes here only. First of all, patents means what? Our firm spends some crores of rupees and we have invented one product. To make this product, there will be one formula. So others should not use this formula, because by spending some crores of rupees, we have invented this formula. We should only get benefit out of this expenditure. Therefore, we register this formula with the government. That is known as patent right. So if we take a patent right on the formula of manufacturing a product, then others should not copy that formula. And generally in most of the countries, patent rights will be given for 20 years. Means for 20 years we can get the benefit from that invention. After 20 years, that formula will become a public domain. Means anybody can use that formula. So for 20 years we have registered these rights now. So patent rights value also as years pass decreases. Therefore on patents also depreciation will be there. So on time basis depreciation will be calculated on patents. You may get one doubt. That is, for example, take Coca-Cola company. So to manufacture their cool drink, there will be one formula, no? So if patent rights are given only for 20 years, after 20 years, if others also can use the same formula, then why other companies are not using Coca-Cola company cool drink manufacturing formula? Here, to manufacture this cool drink, formula is there, no? On that formula, Coca-Cola company is not going to take any patent rights. So they keep this formula as a secret. This is trade secret for them. If they take a patent on this formula, then after 20 years anybody can copy this. But instead of taking patent rights, they keep this formula in secret. As long as this secret is maintained, others cannot copy this formula. Then immediately another doubt. In Coca-Cola company, production staff knows about this formula, no? So they may leak this formula to their competitors. When Coca-Cola is giving jobs to them, so Coca-Cola enters into agreement with them. That is, this formula they should not leak anywhere. So they may be in the job, they may resign from the job. But this formula they are not supposed to leak outside. So if they leak this formula, then Coke is going to take legal action on them. So finally, patent rights, depreciation, debit side we should show now. 2. Depreciation on patents. Patents amount 20,000, depreciation rate 10%, 10 by 100. 2,000 rupees in outer column. Again come to trial balance debit side. After patents, discount. Debit side discount is given. Means discount allowed. Indirect loss. Debit side of P&L account. To discount 500 rupees. Continuation. Freight, furniture, speed post charges. Indirect expenditure here only 900 rupees. Machinery, legal charges, court expenditure is not related with manufacturing work. Indirect expenditure here 700 rupees. Trial balance debit side completed. Come to credit side. Capital, return, sales, bills payable, commission. Credit side commission is given, means commission received. Indirect income. Credit side of profit and loss account. By commission. Adjustment is given, therefore amount in inner column 800. Adjustment number 5. Commission receivable. More commission should come. So current year amount no, therefore we should add plus to be received 400 rupees. Total in outer column 1200. Discount. Credit side discount is given, means discount received. Indirect profit. Credit side of profit and loss account. Discount 1500. Bank overdraft, creditors, outstanding wages. Trial balance completed. Come to adjustments. Closing stock not here. Reserve for bad debts completed. Depreciation on patents over. Outstanding rent completed. Commission receivable completed. Interest on capital. In 11th problem about interest on capitals I have explained in detail. So video link is available in the description box. Interest on capital, firm should pay to owner. To the firm, this is an expenditure, debit side. To interest on capital. On capital amount we have to calculate. Capital amount is 1 lakh rupees. On that 6%. 6 by 100. 6,000. So everything is completed. Finally, find out the totals of two sides. Debit amounts total is 21,750. Credit amounts total 7,000. Debit total is more than credit total. Debit side we wrote expenses and losses. Credit side incomes and gains. Expenditure is more than income. Therefore, answer is loss. Net loss we got. We said we should write credit side total is less. Therefore, credit side this answer we should write 14,750. For that, by net loss. Two sides highest total. Debit amount is more no? That amount two sides we should write 21,750. Credit side also same. So this is all about profit and loss account. Take a screenshot of this. Next, balance sheet. See, this is the balance sheet. Heading balance sheet of Veena Enterprises as on 31st December 2018. Liabilities amount, assets amount. First trial balance debit side we'll see. Means assets side. Purchases, opening stock, returns, debtor. Debtor is an asset, no? So debtor adjustment is given. Therefore, amount in inner column 25,000. Related to debtors, two amounts are there. Bad debt and a reserve for bad debt. So bad debt is given in the trial balance. Trial balance amounts only one time we should show. That one time already in profit and loss account debit side we wrote. Trial balance amount means what? It is already deducted from debtors. Therefore again we should not deduct here. So only adjustment amount, reserve for bad debt we should deduct here. Reserve for bad debt 5% we have calculated in profit and loss account. How much amount came? 1250. That amount we have to subtract from debtors here. Minus reserve for bad debts 1250. Net amount in outer column 23,750. Next, insurance, wages, repair, audit fee, bad debt, carriage, rent and taxes, printing charges, patents. Patent is an asset. So patents. depreciation is given now, therefore amount in inner column. Adjustment number 3, depreciation on patents 10%. We should subtract. Depreciation amount we have calculated in profit and loss account, 2000 came. That amount you subtract from patents. Remaining amount 18,000 in outer column. Next, discount. Freight, furniture, asset no adjustment, therefore amount directly in outer column 16,000. Speed post charges, machinery is also an asset, no adjustment, therefore amount in outer column 40,000. Legal charges, debit side completed. Now credit balances means liability side. Capital at the end we show. Return, sales, bills payable, liability, bills payable 3,000. Commission, discount, bank overdraft. From bank we have taken loan, liability so bank overdraft 5,000. Creditor, liability, creditors 4,000. Outstanding wages. See, outstanding wages is given in the trial balance. Trial balance amounts only one time we should show now. That outstanding wages one time in balance sheet liability side we have to write outstanding wages 2,600. Suppose outstanding wages amount is given in the adjustment. Adjustment amount two times we should write, where one time in trading account to wages we should add. Second time in balance sheet liability side we have to show. But this is given in the trial balance now. Therefore only one time in balance sheet on liability side we are writing. Next, trial balance completed. Come to adjustments. Closing stock at the end we will show that. Reserve for bad debt completed. Depreciation on patent over. Outstanding rent we have to pay. So it is given in the adjustment. Adjustment amount two times now. One time profit and loss account debit side to rent we have added. Second time it is a liability liability side. Outstanding rent 600. Next, commission receivable. Income should come. Asset asset side. Commission to be received 400. Interest on capital. So this is related with the capital. Now finally asset side closing stock is left. Closing stock 8,300. Come to liability side, capital adjustment. Capital in inner column 1 lakh rupees. To this, two amounts are given here. One is interest on capital. Second one is our profit and loss account answer, net loss. So interest on capital we should add to capital, net loss we have to subtract. Therefore, plus interest on capital. In P&L account we have calculated 6,000 came, that amount. Total 1,06,000 minus in profit and loss account net loss 14,750 came now, that amount you have to subtract. Then final amount in outer column 91,250. So everything we have shown. Finally find out the totals of two sides. Two sides total 1,06,450. Thus two sides total should be equal. Then only our problem is correct. So take a screenshot of this balance sheet. So this is the end of present video. Hope this video is helpful to you. Thank you.